Thank you. I hope you all had a good evening. We're forecast to have our first frost tonight. Yesterday didn't make 60. Actually felt pretty cool. We are at that time of year, though, that when you walk outside, you feel heat leaving your body, even when it's in the 70s compared to the way it was a couple of months ago. So fall, at least, is getting closer for us. Um, Yesterday's selling in the note was driven by a rumor out of London that the EU had come up with a $2 trillion rescue plan. That was also followed by stories on the capitalization requirements for EU's banks moving from 5% to 9% capital ratio. So you got really, and that would require, depending on whose articles you read, $1 trillion to $2 trillion worth of recapitalization. The plan right now is for those banks to sell that capital to buyers in the spec market. The problem is, who are those buyers going to be, and the how are those purchases going to be financed? Usually, hedge funds or speculators or large institutions will take on those transactions, but it'll be done on a leverage basis. So, if they prove to be right, they make some better than expected normal returns, and that leverage also gives them some wiggle room based on which securities can be revalued or um, make it to maturity. So I mean it's just a tough problem. The bottom line is that the governments and the EU, if they're going to solve this problem, are going to have to put up $2 to $3 trillion. No politician likes to make those kind of decisions and have their name put on it. So my guess is that Merkel's warnings or comments to the market is that we are making progress. Quote, we are inching along. Is that we'll see the current fund, proposed fund, north of 700 billion euros, and we'll see what the details are to be announced Sunday out of Brussels. So the market, like our Fed does, the EU has learned that if they can talk and give partial solutions, but schedule a meeting right after the solution is announced, they can kick the can down the road, which is the natural position of all bureaucrats and politicians. They want to take credit for the good, but they don't want to have their name on anything that could blow up in their face. So, looking for a trading range through Sunday. If the E-mini manages to rally, then we'll see financials lower. If the E-mini manages to sell, we'll see the financials rally, and that's pretty much the way it's going to be. So there's plenty of opportunity for us as traders to come in and profit from this uncertainty and this guessing what the settlement's going to be. Okay, just structurally, we failed to extend the range lower from yesterday's late selling. No doubt the denial of the $2 trillion story had something to do with that. So the buyers, if you just take a look at where we extended the market from, have been basically just under 2804. So 02 to 10 is where the buyer is right now. And judging yesterday's market, we had a high in M period at 26. We had a K period high at 2902. So 24 to the buck is where we should expect some selling if we can get it up there. All going to be down to the reaction of the E-mini to the news this morning. If it can hold the 15 to 17 area, my guess is we're close enough to 1230 that the exchange members will plan on a gunning stops above 1230. If that is the case, we should sell. Okay, now the very, very aggressive sell is leaning against the value area high, this 19 area. So 19s to 23s. I'm raising it a little bit from what I had in the early write-up to 23, and then we'll make the second sell 27 to the buck. In the buy zone, aggressively letting them push the envelope would be an 8 to 12, letting them get stops below 8, leaning against the overnight low of 10, and then a 01 to 05. And we'll see what happens. All down to the E-minis reaction to the news this morning, and then rumors that are forthcoming out of Europe today. As the European press gets to roll to its evening's editions. Okay, some of the builder stocks have been reacting pretty good this week, so there's a chance the housing start information comes in a little better than forecast. Okay, there's your resistance at 20 to 24. Here's our attractor, basically at 20 plus or minus. So selling with our proper setups in this 19 to 23 area makes some sense. Should get back and test the 14 to 16 area anyway, if our idea is right. If we do break this 12 to 14 level, my guess is the market will go for stops below 10. The question is, can it break 128.04 to 08? I don't know if it can, given this morning's news, etc. So we'll just have to play it by ear, look for a trading range with a lower bias based on the assumption that the E-mini can trade higher today. And we'll see if that transpires. I've watched how rumors get started over the years, and of course I've always wanted to start one of those rumors, naturally. And a long time ago, there was a made-for-television movie about a coup in Saudi Arabia, and they had regular network newscasters come in and do news flashes in this, and a good friend of mine was eating lunch on television at home. His wife was watching that particular movie. So he's sitting down here eating lunch, and an announcement comes across by this newscaster, who's a well-known face at that time, that there had been an explosion and an attack on something in Saudi Arabia. And he happened to be an energy trader for the Quick Trip Corporation, who has some clout in unleaded gasoline. So he picks up the phone and calls up his buddies, his broker on the floor, and says, "Did you just see the news?" And he said, "No." He said, "Well, the stations are carrying this story that something in Saudi Arabia had been attacked." And of course, the broker shouts it out to everybody on the floor, and crude rallies like I think $1.40, as everybody is frantically trying to check the news story. Well, as soon as they found out there wasn't any news story and it hadn't happened, crude comes back, but that $1.40 instantaneous rally in crude became known as the Wichita spike because of Don's phone call. So it's interesting how rumors do get started and how they go around. So what we have coming out of Europe is that everybody knows that it takes $2 to $3 trillion to clean up and solve this pigs problem. And the pigs problem extends to Spain and Italy. Portuguese debt to GDP ratio is higher than Greece's. Greece is spending 50% more than they're taking in tax revenues. The other Ireland and Portugal in the same spot, but the EU can absorb Irish, Portuguese, Greek debt. They can't absorb Spanish and Italian debt. So there's the rub, and that's the problem. And until it is resolved by the markets or through country defaults or the rest of it, the story is going to be hanging over us. The sovereign debt will not go away. And when sovereign debt looks like it's coming to the fore, indexes and equity markets sell. When it recedes, they've got a solution, they rally. But the solution involves cutting bank capital through write-offs, cutting the general population's ability to spend through increased taxes for the nations to absorb those write-offs. All of it boils down to lower growth. So the solutions aren't clean, they aren't empty, they don't favor economic growth. They do favor large losses in the banking sector in Europe is going to take huge hits